follow notification. All right, yo, we're gonna look at today was principle 6. We're gonna look at candlesticks and time frames. Like, by the end of this video, you're gonna understand what candlesticks are, how to use them, and most importantly, how to use them with time frames, like how they collide with each other. I'll start off by saying candlesticks, they're basically like the language of trading. Like, if you don't know what they are, you're just trading blind. So let's get straight into it. Let's just mark out like a bullish candlestick. Let's mark out a bearish candlestick. Let's get into this shit. Let's do red. And then let's create some wicks. Let's move that here. Let's create this wick. Cool. And then let's create this wick. And a long ass wick for why not. Actually, we'll do a little one and then make this one long. Why not? Alright, cool. So we've got two candlesticks here. One bullish, one bearish. Green traditionally means up, so bullish. Red traditionally means down, so bearish. You identify whether it's bull or bear from the color of your candlestick. For my bull candles, they are gold. For my bear candles, they are white. So you can personalize it for yourself. But traditionally, green, red, bull, bear. In fact, let's just write that. Bull, bullish, bearish. And these are in terms of candles. Cool. So what you kind of need to know about candles, and I'll label them now, but just, you know, so you're aware, this, like the filled up colored section of the candle is called the body. So the candle's body, right? And these kind of long ass stick kind of thing looking things, they're called wicks. So I'll explain what they are later, but just have that in the back of your mind. The filled part is called the body. The long kind of parts on the top and the bottom are called wicks. Now I'll label them kind of what you need to know now. Alright, so you see this high, I'm focusing on the bullish candle here. You see the highest point of the wick? We just call that the high wick, or highest wick. I just say high wick, or wick high. You see the lowest point of the wick? Guess what we call that? Low wick. Cool. Now for the body. You see the highest point where the body starts? We call that the upper body. Here. You see the lowest point of the body where it finishes? We call that the lower body. Cool. Let me make this text gold for, you know, visual sake. Alright. Now underline this shit. Actually, let's do it like that. Alright, cool. So we have the high wick, upper body, low wick. Simple. Now there's a few things you need to know in terms of where price opens and closes for, you know, a bullish and a bearish candle, because it's a bit different. You know, the high wick, the upper body, low wick applies for both bullish and bearish candles. There's nothing different about that. But in terms of where price is opening, closing, that's the only difference. And also, I didn't mention this, but these candlesticks, they're also called open, high, low, close candles. That's another word for them. Cool. So, how do I change the text? Do white, shape white, and cool. So for bullish candles, price opens at the lower body and price closes at the upper body. Then none of that just right. Okay, I was gonna say. Alright. So for a bullish candle, price opens at the lower body, meaning price opens here. And price closes at the upper body, meaning price closes here. Just know that, and I'll explain the wicks after this, but it's slightly different for bearish. So for bearish scenario, can we duplicate this shit? So for bearish candles, price opens at not the lower body, at the upper body. And price closes at not the upper body, but the lower body. Wait, did I say that for? I don't know if I just confused that, but price for bearish candles, price opens at the upper body and price closes at the lower body. Meaning that price is gonna open here and close here. Just know that. Cool. Now let's explain the wicks. Now, how do the wicks come into play? Let's say that, you know, we have candles on every time frame: 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, yearly, so on. And depending on what time frame we're on, say I'm on the 5 minute right now on the top left, that means once the candle opens, it's gonna wait until 5 minutes to close. Now what the wicks mean is that within, say we're on the 5 minute, and this is the 5 minute candle for the bullish one, within these 5 minutes, price has traveled, okay, for a bullish candle, price opens at the lower body here, but within them 5 minutes, price has traveled to a low here at the lower wick and to a high here at the highest wick. But once the 5 minutes are over, you know, it hits 4:59, it's closed at this level here at the upper body. And it's the opposite for bearish candles. Price opens at the upper body here, and within them 5 minutes, again, say we're on a 5 minute candle, it's traveled to a maximum here at the highest wick, to a minimum here at the lowest wick, and once the 5 minutes are up, it's closed at the lower body. So write that down, get that in your head. For bullish candles, price opens at lower body, travels within, you know, the wick range, within whatever time frame you're on, and price closes at the upper body for bullish candles. For bearish candles, it's the opposite. Price opens at the upper body and closes at the lower body. But it's the same concept with the wicks. It travels within that range, within whatever time frame you're on. Now, it kind of makes sense, right? Think about it like this. If price for a bullish candle is opening at the upper body, for a bullish candle is opening at the lower body, and once the time is up, closes at the upper body, it makes sense for it to be a bullish candle because price, once the time is up, has closed higher than when it opened, meaning that area or body is going to be green. And it makes sense for bearish candles to be, you know, just the theory behind it makes sense, because if price opens at the upper body, but when the time is up, say 5 minutes, it closes at the lower body, that price is lower than when it opened. So it makes sense for that gap to be red and for the candle to be a bearish candle. Cool. And then let's literally just go on the time frame, the charts, just to like make this stick. So let's go on the 1 minute because it's very fast. Alright, you can pick any candle. Let's just pick, you know, this long ass candle here, right? So you can't miss it. And we're on the 5 minute, bear in mind. Cool. With the knowledge I taught you, and let me tell you this, my bullish candles are gold, my bearish candles are white. So with the knowledge I told you, we know that price. Oh shit, that was my phone. I thought that was a bee buzzing. Fuck. Anyway, we know that price for bullish candles opens at the lower body. So price opened at this level here. Because we're on the 5 minutes, it traveled to a low here at the lowest wick. We can see it here, right? The lowest wick here. And it traveled to a high, still within the 5 minutes, within the highest wick here. We see the higher wick here. But once the 5 minutes were up, it closed at the upper body here, forming that big ass, filled gold area. Open, close. For bearish candles, it's literally the opposite. Oh, I should have did a side by side, bullish and bearish for the chart, but it's fine. Let's just use this one. My mouse is on right now. We know that for bearish candles, price opens at the upper body. So price opens at this level here. Within the 5 minutes, and it doesn't matter. I could be on the 15 minute, I can be on the 1 hour, 4 hour. Let's just go on actually, let's do the 5 minute example first. But within the 5 minutes, price has traveled to a maximum here at the upper wick or the higher wick here, to a minimum at the lower wick here. But once the 5 minutes were up, it closed at the lower body here, forming that, bearish candle because it opened at the upper body, but closed at the lower body. Price is now lower. Cool. And it's the same for literally everything. And what you'll see in some examples are candles that look like this, where my mouse is right now. Candles that have literally kind of no body. We call these dojis. You don't need to... The logic is the same, right? The reason the body is so small is because, in fact, you tell me, think about it. And I'll tell you now. The reason the body is so look at it, it's so small compared to these others is because price has opened at the level here, obviously, where then you can barely see the body. It's obviously traveled within a high to a maximum here at the higher wick, to a minimum here at the lowest wick. But when the 5 minutes were up, price got to a similar level where it opened, meaning, or it was because it's a gold candle, it's bullish, it may have just a tiny bit higher than when it opened, and it closed a tiny bit above where it opened, right? Meaning there's going to be no space for the body to form. That's why it's like this. And you'll get examples where there's not even any wicks, but think about the theory behind why there wouldn't be a wick. Let's look at this example here. Bullish candle, it opens at the lower body here. Once the 5 minutes were up, during the 5 minutes, it traveled to a low here. But as the 5 minutes were, closing and getting, as the candle was closing, basically, the 5 minutes were ending, it was traveling to its maximum. Meaning there's no wick, because wicks are only formed when price reaches that level but kind of comes back down. But you see here, it's within its close is kind of not allowed for a wick to form, so there's no wick. But just think about the knowledge, it makes sense. So that's kind of just, candlesticks and time frames. And, I'm on the 15-minute time frame. I'm on the 30-minute time frame now. I'm on the 1 hour time frame now. It applies for all time frames. Cool. Now, hopefully, if nothing's stuck there, rewatch the video, because it will stick. And once you understand, go through some examples on the chart. Just literally go onto the chart, 5 minute, 1 hour, 30 minute, whatever time frame, and then mark out, where price opened, where price closed, where price traveled through. Find some examples where there's no wicks. Find some examples where there's, a little body. Get this in your head. Cool. That's it for candlesticks. Let's look more about timeframes, right? I haven't really talked about timeframes because they're really important. Obviously, we'll get into using them for bias and shit, like daily bias. You probably don't even know what that is right now, but timeframes. Timeframes are like lenses, right? Think about it like a camera lens. A higher time frame is going to show you a bigger image, a zoomed out image of what price is doing. But because it's so zoomed out, you don't really you get to see a big picture, right? Think about like a camera, you get to see a big picture, but in terms of the minimal details, you can't see them. And right now I'm on the weekly time frame. But as we scale down further and further and further, I'm on the 4 hour, 1 hour, 30 minute, 15 minute, it's like a lens. So say for your camera is zooming in, you're getting more detailed and detailed and detailed. But think about it the same way, if you're zooming in, you're kind of losing overall context. You have a camera, you zoom out, you can see everything, but in terms of the details you can't see. But once you zoom in, you start losing backgrounds and stuff you could have seen in the bigger picture. Same with time frames. And what you need to know is that price is fractal when it comes to time frames, meaning kind of all these concepts I'm teaching you, they apply to every single time frame. And the cool thing about them, right? You have the 5 minute, you have the 50 minute, and this might, click or not click for some, but say I'm on the 5 minute candle, right? This candle is forming. In fact, let's do a little candlestick overview. This is a bearish candle right now. Listen, when candles are forming, they have the potential to become bearish, they have the potential to become bullish, depending on whether it closes above or below the opening price. Right now, price is opened here and it's below the upper body, right? So this is why the candle's white. So it's currently bearish. It's traveled to a maximum here currently and to a minimum here currently. But look at this shit. It's still forming, and price is forming that lower body, although it hasn't closed yet. This could even be a bullish candle, we don't know yet. But the thing about candlesticks is I'm on the 5 minute time frame, right? This one candle represents 5 minutes. So meaning if I go on the 1 minute time frame, these candles, maybe let's wait for it to close. Oh, look at it now, it's got nobody. But once this candle closes, what it means is that five 1 minute candles are going to represent that one 5 minute candle. Do you understand that? And it's the same for if I go on the 15 minute or the 30 minute, one 30 minute candle is represented by two 15 minute candles. One 15 minute candle is represented by three 5 minute candles. So you can see as I scale down, go lower time frame, we get more precise. But I start losing, as I get more precise, I start losing context. I start losing the bigger picture. This is why we use lower time frames for entries, but we use higher time frames for getting our bias, getting our direction for the day, where we want price to go. And then we use the lower time frame to kind of sniper that shot, get a precise entry. But yeah, just know that, candles are represented by candles. Price is fractal, meaning You know, everything is happening on, you know, things that are happening on one time frame is happening on another, on all of them, all of them. And confluences apply to every time frame as well. Another thing is that, you know, this same level which we're at on the 1 minute will be the same level we're at on the weekly, on the monthly time frame. Yeah. But obviously this weekly time frame is going to close in like what, a week, whereas this monthly minute time frame is going to close in a minute. One is precise, one has much bigger context, bigger picture for, you know, more price action. So cool. I hope that kind of clicks. Again, if it doesn't click, rewatch the video. If any video doesn't click, what I mean by click is like make sense. Rewatch the video, bro, because this shit is important. Every video is important. So yeah, all I want you to do is just, you know, go on the charts, you know, and you'll get, you know, kind of some chart experience into this shit early. Go on TradingView. Maybe set your colors. What color do you want your candles to be? Mine are gold. My up candles are gold. My down candles are white. If you want my chart colors, I'm pretty sure I'll have a video up soon. Actually, no, by the time this video posts, I'll have a video in, I think, my Instagram link. So go there, get my chart colors if you like them. And then go into the chart, you know, see where price, you know, where some candles open, where they close, where they travel where they travel in the range. Fuck, you know. And then kind of see how, you know, bigger time frames show, you know, a bigger picture. Smaller time frames show, you know, more precise detail. And kind of see how, you know, 5 1-minute candles represent 1 5-minute candle. Do them 3 things, and if you have to rewatch the video, I'm telling you, you'll perfect candlesticks, because they are very important. You know, they're very important. You know, stop looking at the charts randomly. You know, watch the video until it makes sense, because it will make sense. All right, cool. That's it. I'll catch y'all in the next video. Peace.